From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney. I'll be joined shortly by David Scutt, Scutty, from StoneX. So we'll get back on that bike and have a little chat about the markets, as I'm sure you've heard us do many times before. The local market has closed lower. So the CIBO Australia Index off by about 0.5%. As the last of the day's trades go through the ASX, it's down slightly more by about 0.6% at 8,156 right now. Few interesting dynamics going on right now. We've got Bitcoin jumping to a 1-month high, and the yen is grinding even lower as we speak. So we do know that the Fed Reserve cut rates by 50 basis points last week. The yen is extending its decline. Thinner trade because it is a holiday in Japan. It's also because we saw the Bank of Japan's governor throwing a little bit of cold water on any expectations for further interest rate action there. Interesting to see what's going on in Bitcoin. Really appearing like, we've got this Goldilocks scenario playing out in markets right now. I don't think it was a big surprise to see our local market lower, although I will note that now we're watching copper in London push higher. So interesting to see some of the moves coming through. We've got gold, lifting to yet another record high. And so plenty of enthusiasm for some of the gold names here as well. We'll get you across all of those sectors in just a moment. Our key themes, though, a bit of a rough start to the week here locally. And part of the weight on the market overall actually coming from an unlikely sector, being the consumer staples, because the ACCC has accused Coles and Woolworths of discount deception, if you can call it that. We will get you across the details in just a moment. And of course, while we contemplate what the BOJ, we still are trying to translate what the US Fed wants us to think through that 50 basis point cut. We are just holding out and holding tight, expecting the RBA to make no move tomorrow. I did have a conversation with Sean Callow. He is an independent market strategist and economist, and he said, look, it is time for the RBA to stop even contemplating, to stop talking at those board meetings about interest rate hikes and the possibility of them here in Australia. We did have the Judo Bank PMI, the composite PMI, here locally today. And while it doesn't garner the sort of attention that some of the PMIs do overseas, we did see manufacturing fall into contractionary territory. So not looking so weak since we were in the depths of the pandemic. So we will continue to get across some of those key stories. And as I said, Scotty is standing by. Quick look at some of the sectors of the day. Consumer staples, as I said. One of the worst performing sectors, check out Coles and Woolworths. It's unusual to see falls to that extent in some of those consumer staples names. It as a whole was down by 3%. Consumer discretionary was also a poor performer. Now the material space did still end in negative territory with BHP, a big weight, off by 1.4%. Overall, the sector was off by 0.6%. The exception to the rule, though, was the gold names in the metals and mining sector, with gold hitting yet another record high. Newmont ending the day 1.5% higher. Also, we had uranium looking very good. Boss putting on a solid 9%, Paladin up by 6%, Deep Yellow up by 7%, and Bannerman Energy up by 15%. I had a good chat with Jonathan Takadina from MPC Markets on the trade today. He gave his view on Paladin Energy and talked to us about not just the technical drivers, but the fundamental drivers of the uranium price and how it's panned out on our market today. I'm sure you've heard, even the Prime Minister has weighed in on this one, with the ACCC accusing Woolworths and Coles of misleading their customers by claiming they were dropping prices on hundreds of products when they actually increased them, only to then say that they were in the discounted range or the down. You know what grocery store that saying is associated with. So we'll see how that one pans out. REA Group has been rebuffed yet again by the UK's Rightmove, so it did have to increase its offer. It's the third time. And also interesting, its CEO is complaining that Rightmove's board is not engaging as he reckons they should, so the share price is off by 2%. Helios, though, rallying. It's selling off its Loomis Imaging to Affinity Equity Partners for $965 million in cash and equipment lease free. So up by 7%, but I just remember having a conversation with, I think it was Junbei from Tribeca Investment Partners, who was questioning whether or not, now she did reckon there was a trade in it, going by memory, with the prospect of this sale coming up. But what happens to Helios now? You know, it's shrinking to greatness, question mark? We'll see. Austal jumped after winning a $220 million contract with the U.S. Navy, so that's adding to some of the gains that it saw last week as well. I was chatting with the team at IML, Lucas Good, last week, and he talked to me about Austal and its prospects going forward, if you'd like to take a look or listen for that online. Welcome to the COB, David Scutt. Scotty from City Index StoneX. Hey, Scotty, nice to see you there. Look, no big surprise that we're seeing pressure coming through on the local market, correct?
Not particularly, and I think a lot of the seeds were sown last Friday because the reversal that we saw on the day from record highs really kind of gave us an impetus as to what was likely to go and transpire today, and it's actually come to fruition. So, as you mentioned as well, public holiday in Japan, so volumes are very low. So I'd also be very cautious about reading too much into the price action. But we've had a really great run, and a pullback is probably not a bad thing.
Yeah, I think we can call it a pause for breath. We often do when we see these types of runs coming through. So Japan on holidays. Talk to us about the dynamics driving the yen, Scotty.
Yeah, look, primarily it's still the US interest rate outlook by and large, but realistically the markets also pay pretty close attention to what Ueda in particular says from the Bank of Japan. Now, he was talking last Friday, of course, discussing the potentially not needing to go and move rapidly when it came to increasing rates further because the risk of overshooting on the inflation upside had diminished in his view. So the market overreacts to what he says, but realistically, if you're trading dollar yen right now, you just have to go and follow what's going on with the US interest rate outlook. That will go and give you really strong hints as to what directional risks for dollar yen lie. So at the moment, we're seeing that despite that 50 basis point cut that came through last week from the Fed, the amount of easing that they singled out in 2025 was a little bit less than what the markets had anticipated. So we're seeing that yields have just crept up. Positioning as well was pretty long running into that particular meeting. So I'm not surprised you're going to see some upside at the moment.
Yeah, okay. Now that we have had a few days to digest this 50 basis point cut coming from the Fed, I mean, a lot of the conversations that I had today, Scotty, were, okay, what do investors do now? Is it a harbinger of big economic problems to come, or is this yet another signal that we'll start to see a broadening out of the rally, even into the smaller end of the market? What's your updated take?
Look, I think it's honestly too early to tell. And talking to other people at the moment, people are saying to me, Scotty, what do you think you should do with some cash at the moment? And I say, leave it in cash. As long as you're getting a rate that's above the inflation rate, you've got time on your hands. We've seen so many asset prices have gone and rallied really, really aggressively in anticipation of this soft landing. We know that so often, though, central bankers, policymakers and the like always start off trying to go and deliver a soft landing. But of course, in practicality, a lot of the time it ends up being a hard landing. So there's not really anything wrong with sitting on the sidelines now and waiting. And going back to your initial question about the pullback today, that's probably explains a lot of it. We've had such a good run, so much good news is priced in. So if it's wrong, you're going to get a lot more directional risk to the downside than upside from here.
All right, let's talk commodities, shall we? Because we have had some action from the PBOC. We've got news that they are holding some sort of a media conference or update tomorrow, which is interesting, I think. But we saw iron ore futures falling today. Clearly, we've got concerns about weak demand in China continuing. So just what is it? Overshadowing hopes of stimulus? Is stimulus unlikely? Or is it just that even if there were to be stimulus, the Chinese consumer is so wary of Chinese property that there's unlikely to be any, real meaningful change there in that economy?
I think you just nailed it on the head right there, because there's no great hopes when it comes to re-stimulating the property market. There's lots of rumours that go around all the time, but nothing concrete has come to fruition. And I think the thing that really startled a lot of investors and traders late last week was that unemployment data that was released, showing that there was another big increase in unemployment coming through, both for young Chinese and the broader populace. And you go and look at what that means, the implications for economic growth. Clearly, things are not going well in China right now. So when you look at some of the industrial metal space, I know that you mentioned copper's been having a decent run recently. I wonder how long that can continue, because that's the hopes for the soft landing narrative. But the biggest consumer of copper in the world is China by some distance. And if it's not building a lot of properties, a lot of residential towers, then it's hard to see where that demand continues to go and come from to go and justify that price action. So I'll be cautious in that space right now.
Good. All right. Okay, so when it comes to what we're expecting tonight, this week we've got global PMIs. That'll be interesting. But we also get a lot of Fed speakers. So will they be, in your view, singing from the same songbook now, or will they be putting a lot of meat on the bones when it comes to interest rate expectations going forward?
Look, it really is the one thing we can go hang our hat on this week when it comes to some of the key drivers. We've got a lot of Fed speak coming out, 3 speakers tonight, and then Thursday is going to be really busy as well, including Jerome Powell and John Williams as well from the New York Fed. But the broader context is you've got to remember what happened back last week. So the Fed cut 50 basis points, all bar one member, when it was on board with that particular move. And they didn't signal any alarming increase in unemployment. They only signaled a very, very shallow rate cutting cycle. So you put those together, it's going to be talking about reducing the level of restrictiveness in policy settings, and they're going to be talking about delivering the soft landing, feeling confident about the outlook there. So to me, in a window where there's not a lot of top-tier economic data around this week, it could be the kind of environment where it could really help to go and boost risk appetite. So I'll keep a close eye on that, but I can't see the Fed getting really, really downbeat about the economy, because that would go and serve against what it's trying to deliver right now.
Okay, and then of course we've got this chart up on screen right now about the RBA. Any idea of the type of rhetoric that's going to come from the RBA? I chatted with Sean Callow today, who said, look, they should not be talking about interest rate hikes at this board meeting, which started today and continues tomorrow, as you know.
Yeah, look, I completely understand where Sean's coming from, but from the other side of the equation, we all know that if the RBA stops talking about hiking rates, everyone's going to start going imminent rate cuts. And we know that that's exactly what they don't want to try and foster, that mindset right now, and getting people to go in position for those imminent rate cuts coming through. So I suspect that we'll get much the same kind of commentary that we've heard recently. The key thing for me, for the RBA to go and consider starting to cut rates, and they've said this in the past, Michelle Bullock in particular, she was talking about the need to go and see not just one, but multiple inflation reports. Now, when she's talking about that, I don't think she's talking about the inflation indicator that we're going to get on Wednesday. I think she's talking about the full gambit quarterly releases. So you need at least 2 of those. We get one for Q3 in late November, and we go and get in late October, and we get another one in late January 2025. So to me, that points to the kind of environment, and unless we see a big increase in unemployment coming through, unless we see a global event, it makes it very difficult for the RBA to go and feel confident they're going to get inflation back towards the target. So to me, the hopes that we're going to see a near-term rate cut are still just at their hopes.
Yeah, it's interesting because CBA has delayed its first rate cut expectation to December from November. Not a big change there, but others like Paul Bloxham at HSBC don't expect that we'll see interest rate cuts coming through here maybe until mid next year. So very interesting dynamics right now. Hey, when you are talking to clients, Scotty, because I think that's a real interesting barometer of what's going on out there. Gold, I would imagine you're getting lots of questions on. What else?
Gold and cyclicals. What is the ramifications from this 50 basis point cut? How are people feeling about the other prospects for the economy? Will it go and help to go and foster a re-acceleration in activity, or will it just be the start of another cycle where we're seeing that we're too far behind the 8 ball here? And as I mentioned earlier, it's really too early to tell. I wish I could give you the definitive signal, but I just think it's way too early. If my gut feel right now, particularly when it comes to the US economy, is that it's just going to be like any other cycle. Maybe not as bad a downturn as we've seen, but when you look at what's going on with underemployment, you look what the trend is going in unemployment right now, all of it looks really, really similar to prior cycles. So to me, I still kind of favour that the Fed will have to get a little bit more aggressive with its rate cuts than what's being signalled right now. But quite simply, it's still too early to go and tell on that front. We need to go and get more information. And unfortunately, it needs to come down to monthly employment reports, and we only get one of those per month.
Got it. Scotty, nice to see you to start the week. Thank you.
Take care.
Take care. All right, stock of the day today was Webjet, Nathan Samasundaram, Deep Data Analytics, and Francesco Destratis from Ward Minette. Here's what they had to say.
Travel is just like retail, right? When people have money, they spend. All our savings are down. This is going to slow down, but then there'll be a cycle to it. So keep it on your shopping list. Classic cyclicals. You don't buy them at the multi-year highs. You buy them when nobody wants to touch them. Now is not the time.
Our analysts suggest that whilst consumer travel and leisure travel has come off a bit, it's showing some signs of some resilience there. So it's worth a look. I'm not about to say buy, but I'd be saying hold at this stage.
So that's hold both?
Hold on both, yes.
Yeah. And Nathan, is that for you then too as well? A hold on both at this point, but with the potential to look to buy at a lower level?
I think I would sell the retail one for the moment and then come back later. I think the B2B will be a lot more stable in the short term.
Okay. All right.
So yeah, solid hold from both of my guests, our guests, I should say. Shouldn't be selfish about that, but interesting with Webjet looking to split into two, and the new name is Web Travel Group Limited. Okay, market leaders, let's see if there's any stories in here. Well, there's the uranium one playing out very clearly. Sigma up by close to 4% as well, and Helios off the back of that news that it's selling its imaging division. Flipping the page and some of the laggards. Core Lithium, Strike Energy was out with some drilling results, and that's clearly impacted the share price there. There's the stock of the day. Chalice Mining and Liontown Resources, not seeing any news associated with them, but just off that list of laggards. Woolworths, which ended down by 3.5%. Coles off by 3.4% as well. Now, laggards and leaders in the small to mid-cap space. We've got Appen. That's an interesting one. It has been seeing some buyers as of late. Bit of a shift on market by 17%. Some of the laggards in the small to mid-cap space, Core Lithium, Silver Mines, and Echo IQ. We do get the Chicago Fed National Activity Index, also those global PMIs, which are really interesting, particularly for the Eurozone and the United States, given what we're seeing in terms of central bank action. We've got those FOMC members, Goolsbee, Kashkari, and Bostic speaking. Also, a couple of ECB board members appearing as well overnight. So, look, macro continues to drive the micro, doesn't it? It's just something that we just cannot get away with. Now, we will be watching oil with much interest. We've got some news coming in that the Israeli military has bombed Hezbollah targets in Lebanon. So that will likely be a driver of the oil price as we continue to see the geopolitical tensions rising in the Middle East. Also, we'll be keeping our ear out for anything coming from the U.S. presidential election campaign. We're told that the Vice President Kamala Harris plans to roll out a new set of economic policies this week to help Americans build wealth and set economic incentives for businesses as well. Wall Street futures all through the day today have been quite firm, and now is no exception to the rule. Just time stamping this about 4:20 here in Sydney. We're watching the S&P 500 futures up by about 0.3%. Gold hitting a new record. Oil up as Israel has struck Hezbollah. There's lots going on tonight. Tomorrow here, it's all about the RBA interest rate decision. Say no more, say no more. We'll be recapping that for you around this time tomorrow as well. If you're listening to us in podcast form, we'd love it if you could check us out online, ausbiz.com.au, free to sign up, and you get access to all sorts of great analysis and commentary, such as what we got from Scotty just then. We also get a lot of stock tips and ideas and opportunities from a whole host of expert guests. Really, really pleased with who we know in the Australian financial services community, and they're really giving in some of their expertise. So if you've missed anything today, feel free to catch up online, ausbiz.com.au. So the local market, now that the dust is settling, closing down by 0.5% for the COB Australia Index, and as I take that over to the S&P ASX 200, also closing lower by 0.7%, 8,152. It's been a pleasure being here with you today. Thanks for joining us. We'll see you tomorrow.